Hi, good evening to all of you. This is a webinar being organized by ClearTax and ICICI Lombard in terms of how do you handle the SME risk during COVID times. Just to give you a brief, myself, Birendra Mohanty, I head the SME business in ICICI Lombard. And just to tell a brief about our company, ICICI Lombard, the first is basically it is the largest private sector insurance company. And we are a focused company in terms of SMEs, in terms of across the country. And we are a technology-driven company in terms of solving the issues of SMEs using technology from the insurance point of view. Just to give you something in terms of some of the awards we have received, I mean, in a brief, it is DNB Awards or Dun & Bradstreet Awards, of Innovative Awards or IBI Awards. The brief around that is ICICI Lombard is a channel-friendly company, is a customer-friendly company, is a technology company, and an innovative company. If you ask me in a broad thought process about ICICI Lombard, this is a brief about that. I don't think I should talk more about that. Let me come to in terms of topic. How are the SMEs getting affected at this point of time because of COVID, and what are the challenges they are facing, and from the insurance point of view, what are the things they need to be aware of it. So that would be the thought process around the next 40 minutes in terms of discussing with each one of you. So this is the first slide in terms of first cut view in terms of impact of COVID on the SMEs, the startups and entrepreneurs. COVID has hit them in majority areas, but 2-3 areas where it has strongly hit them. The first is cash flow. I mean, one of the biggest thing required for SMEs or MSMEs or startups or entrepreneurs is has to be a continuity of cash flow. That continuity has got disturbed because of this COVID. The second thing that has hit them hard is basically the supply chain disruptions. And in terms of supply chain disruptions, what has happened is it is both on the demand side as well as on the supply side. If you see, these SMEs are being supplied by some of the micro SMEs or the small startups, and they supply to the large companies or mid-tier companies or things. Both the side has got disturbed. I mean, in terms there is lesser demand out there, and the supply to these companies also has got disturbed. And it is not only that, this supply chain disruption has also happened because there is a log jam in terms of export import happening across the country. So it is not only domestic, it is both at the export import as well. The third, of course, which has hit them very hard is the labor force. And in terms of labor force, there is a huge migratory populations which has been working with SMEs and MSMEs across the country in major cities like Delhi, Bombay, Chennai, Bangalore, all those major cities, Pune. And this labor has shifted back, majority have shifted back to the hometown, and there is a shortage of labor out there. So it is no more a one problem in terms of COVID, or it is actually a multiple problem being surrounding the SMEs at this point of time. So there are challenges and price variations, there are production shutdown, there are export issues. So these are broad areas in terms of how the SMEs are getting affected at this point of time from the COVID point of view. This is a broad slide in terms of what is the impact of lockdown on the risk. The way we see SMEs it is not a risk in terms of, from the insurance point of view, we define it as a risk. How do you see the risk in SMEs during the COVID time? There are multiple parameters which decide how the risk is there, whether the plant is shut down or running, whether the process is continuous or batch process, whether there is discontinuity in the raw material supply, what is the percentage of the stocks in your business model. So these are multiple areas on basis of which the risk parameters change from the SME's point of view. But if you see, I have put in a grid in terms of which are the areas or which are the companies which have got affected the most because of the COVID, the chemical, the textile, the plastic, and probably the storage. And I mean, if you see the low or the medium one, the pharmaceuticals, the power generations, low basically food processing, FMCG, and in the very low basically are those non-industrial risks like the schools, colleges, or probably service sector industries or the pipelines. So these are lesser affected from the risk point of view from COVID angle. So these are a broad grid in terms of where you are placed in each of this angle, just to put a thought around that. In terms of sectors, what I've done is we have put in line of businesses. The way we define insurance, basically, whether it is a fire insurance, whether it's an engineering insurance, whether marine or cargo or logistic insurance. WC stands for the workman compensation insurance, and liability insurance, and the miscellaneous insurance. So how has the risk changed in terms of in each of these product lines? Probably in the fire, the biggest risk that change would be the stock accumulation. or the business interruption risk, because your business has got affected and it is not adding to a gross profit. So there is a change of risk out there, and because the supply is not there, the stock is getting accumulated out there. That's the risk, increase of risk out there. In engineering, the risk is basically the unattended site. I mean, all of a sudden you see the metros, you see the road constructions, the machines are lying on the road, the equipments are lying on the road, the laborers are not there, the security guards are not there, the risk all of a sudden is open, and it's open to burglary, theft, damage, all those things. In terms of marine cargo, the major challenges basically are supply chain disruptions. I mean, a lot of trucks, I mean, in the last 3-4 months, they're stranded on the road. I mean, they could not supply the goods to the consumer because the consumer itself, or the trader, or the receiver of the goods, he himself has closed his shop. I mean, nobody's there to receive these goods. In terms of WC or the workman compensations, the biggest challenge is the labor has relocated. I mean, today in a factory, if there are 100 laborers who used to work, probably 30 are working. And there is a change of laborers working out there. Some have gone back to homes. Some new laborers have joined back. So there is a labor relocation problem that's happening. In terms of liability, the biggest challenge that has happened during COVID is a cyber attack. I mean, if you see, majority of all of us are working from home. Today, I'm giving this webinar from my home. So when you are working from home, unlike when you're working from a company, when you're working in a company, you have a much secured network of cyber. In a home, you use your own Wi-Fi or home Wi-Fi to access your databases, informations, or the company sites and other things. And there is a very high chance of cyber attacks out there. So we'll talk about all those things. I mean, I will be talking detail about each one of these parameters in the forthcoming slides. And we'll see what steps you need to take in terms of safeguard yourselves, or what are the risk guidelines, or what are the insurance guidelines, or the regulatory guidelines around that, so that you're aware of the steps and changes to take out of that. So we'll start with the property risk. Basically, that's the fire insurance and the engineering insurance. One of the biggest questions which I always face is the silent risk. What basically silent risk is, I mean, in very simple terms, if your plant stops being operational for 30 days, it becomes a silent risk, and it has to be rated differently. And you have to intimate to the insurance companies that your plant has become silent or things. And if you have not intimated, I mean, the regulation says that, and in the silent risk, the claims comes, it does not get covered. What has happened is this is not a individual induced silent risk. This is a government induced silent risk, because there is a lockdown across the country because of government notifications. So what the regulator has done, regulator is basically our IRDA, that is the Insurance Regulatory Development Authority of India. Regulator has done is they have given guidelines that this continuity, I mean, cover should be considered as continuity, even if it has exceeded 30 days. So there is no challenge around that. But if you have a bigger risk, please keep your insurance company posted about that. I mean, there is already the regulator has given those guidelines for seeing continuity. It's not no more silent if there's lockdown induced. But my suggestions to each one of you would be just put in a mail to an insurance company saying there is a continuity of non-operational plants, or probably the lockdown is continuing, just on a safer side. I mean, even if the regulator is given, but on a safer side, do that. The regulator has already given the guidelines saying even if it is locked or if it's non-operational for 30 days, the continuity of cover will be there. It will not be considered as silent risk. The second question normally which comes is, does your property policy covers the loss of profit? Because a lot of plants have got covered. And the operation has got stopped, and there is a loss of profit, and basically your loss of profit covers in terms of, had you been operational during this period, your profit you would have earned that, and does the insurance policy covers that? So let me give you what is business interruption risk or the loss of profit cover is. Basically, this is which can cover a lost income or continuing expenses while the business is closed, being repaired because of a disaster, or there is a insured peril of a fire policy acting on basis of which this loss of revenue happens. So pandemic is not an insured peril. So loss of profit is not covered in this fire policy or even the loss of profit policy. So that's a big misnomer, because people say, even if there is loss of profit, please pay for that. That's not covered in this policy. I thought I'll just share with you. I mean, give a clarity around this. These are on the left side. I put in some questions, and on the right side, I've put in explanations out there. The questions is basically there is an issue around liquidity. Some of the insurance company or some of the clients or the customers have asked, can we have an option of extending the policy on a pro rata basis? Or take a short period policy because there is liquidity issues. Yeah, you can take a short period policy. The difference between a short period and a pro rata is In a pro rata policy, whatever is the annual premium, you divide it proportionally for the time you want to take. That is pro rata. In a short period, you charge a little bit higher than the pro rata. So if you take a short period policy, or a smaller duration policy, you have to pay for a shorter period, or so the short period basis, not at a pro rata basis. So for example, for a 30% of time, you might have to pay for a 40% of the premium. That's the way it is short period. So you can always take a short period policy, small duration policy, even if there is issues around liquidity. I've already talked about in the pandemic cover, it's not covered. So what should we focus basically post lockdown when the situation gradually resumes? 2-3 things. One, of course, when the lockdown is over, the first thing is restarting is not an easy process. Please follow all guidelines for restarting, because you might be operating in a chemical plant or a manufacturing plant or probably a ancillary units, but there are manuals for restarting each of the plants or the factories of the machines. Please follow that. And what would have happened is, because your plant is closed or your supply has not been done for the years, your sum insured would have changed. Probably your stocks would have got increased. So you have to redefine your sum insured with the insurance company. If there is a huge fluctuations around those sum insured, please intimate your insurance company accordingly. This also some SMEs did put me a mail some days saying, boss, if there is the plant is shut down, why do I need to take insurance? This is an expense item. Let me stop my insurance, and once the plant starts, I'll do that. I've just given 2 examples below. Risk can hit you whether you're operational or you're closed. Risk, don't differentiate between those things. So there are 2 big plants, one in Chandigarh, one in Tagros Chemicals, that is in Dahej. And there's huge losses. Even if the plants are short, there are huge losses. I can give you one example. Even in ICICI Lombard, we had one claim in Daman, and there was a huge loss of around 20-24 crores of premium. Claims amount. So don't keep your plant uninsured. That's the thought process. Even if that's a lockdown, please don't keep your plant uninsured, because risk can hit you even if you are closed. So this is one of the photographs. Since it's in a PDF, I'm not able to show the videos out there. But basically, even if claims have come, we have actually used drones to do inspections of those risks. You can see those photographs. These photographs are taken by drones from the air. And those drones are used to do the survey, because as a customer-centric company, it is very critical that even if there is lockdown, you need to stand behind a customer to help him at the time of claim. So we actually use drones to do those surveys, and with the basis of scanned documents in terms of basis of information of the claims, we paid this claim, and the claim, this happened somewhere in the month of April, 7th April, and the process is going on, but we already paid some on-account payment, because what happens during this point of time is, in a lockdown, when your revenues are not coming and your losses has happened, it becomes a double jolt to each of our customers. So we do take care in terms of those things and ensure that the claims process do not stop even in the lockdown process. So in terms of marine cargo or the logistics, lots of vehicles are stranded on the road due to lockdown. What are the provisions coverage in terms of transit, whether it is covered or not? I thought I'll just give you basics around that. So there are 2 types of storage. One is the incidental storage, and the other is the intentional storage. Let me give you some example. Incidental storage is basically storage during your ordinary course of transit. This incidental storage is covered in your marine policy, but intentional storage is not covered in the marine policy. Let me give you an example. Say, for example, starting a transit from Pune to Delhi, and the consignment is stored by the transport in the Jaipur without the knowledge of the customer for paperwork or transshipment or the change of driver, etc. So this is the incidental storage. You're transferring your goods from Pune to Delhi, and in a Jaipur you have incidental storage. Any loss between that, it's covered. Even in that, Jaipur is also covered. But think of another point. For example, in this situation, if the customer takes controls of the goods and stores in Jaipur, then the losses happen. Then it's not covered, because you have taken goods into your custody, and the insurances got closed at that point of time. So if it is incidental storage during the transit, it is covered. If it is intentional change of storage, it is not covered in marine policy. So there is also certain clause called the duration clause in marine. Basically the marine policy ceases or closes the moment you take delivery of the goods, or upon expiry of 60 days if it is a sea voyage, 7 days if it is a rail or road voyage, or 30 days if it's air transit. So whichever covers first, that on that basis the marine policy ceases. So let me give one situation 1 and situation 2 examples around that. Suppose a transit started on 27th of March by road and reached to Calcutta on 15th of April, and the consignment waiting in Calcutta for final unloading, right? In this case, the insured needs to approach the insurance company by 22nd April for extension of the duration clause, because this is a railroad transit, and for a railroad transit, it has to 7 days of duration of the transit clause. See the reverse in terms of if the consignment reached the JNPT port in Bombay on 10th of April, awaiting unloading, there is an automatic cover of 60 days, because if it is a sea voyage, it is 60 days. So considering the current situation, no need of extension of duration clause till 60 days. Beyond 60 days, you need to get in touch with your insurance company. He might charge you a little bit of premium and get the continue the coverage. So these are some of the thoughts I thought I must share with you, because each one of us will be facing some sort of problem around this, and giving you examples would actually help to clarify that. I've already answered the first one in terms of on the orange one on the left side. Some of the questions is because of the delay, is demurrage and detention charges covered? No, it is not covered under normal marine policy. If the question is basically non-delivery after arrival of carrying vehicle at destination town due to closure of the premises due to lockdown, non-delivery resulting in damages would be covered into the policy. Extension of duration clause can be checked with the underwriter either by paying additional premium or by modifications of deductibles. Both can be done in discussion with the insurance company. So these are some of the provisions within the guidelines of marine insurance transit. So you need to be aware of this. In terms of engineering, the biggest challenge basically is the cessation of work. I mean, a lot of laborers are moved out, and the engineering guideline says, when I say engineering policy, there are basically 2 types of products, that is called erection all list or the contractors all list. So contractors all list are basically the civil projects. Erection all list is basically all the plant and machine development corporates or the large companies or the development like transmission lines. Those are basically erection all list products. So there is exclusion of coverage arising of cessation of work. And this is basically related to abandonment of work or projects, because people have left out the project and let it go. Then your engineering projects policy ceases. In this case, you need to intimate to your insurance company and do all risk management practices which is possible to safeguard your risk. Please continue to do that and keep your insurance company updated about that. I think that's the thing you need to do. Some of the questions. Is the extension of policy possible without premium? No, it is not. If you want to extend this policy, because in the last 2-3 months, because there is COVID, no work has been done, and the project period will get extended. So when the project period get extended, you will have to pay premium to the insurance company, because insurance companies carries the risk both in the abandoned period as well as at the extension period. So there is a premium for that. There is a premium rebate in extension due to lockdown? No such things are not allowed in terms of rebate out there. Does the policy cover the expenses towards mobilization of manpower and recommitment of the full-fledged operations at site during lockdown? No such losses are covered. Can the installments be waived off? No, not at all. The insurance cannot be waived. So these are some of the guidelines of thought process in terms of what is covered in the engineering products and what is not covered. And the biggest thing is basically in terms of cessation of work. And there you need to keep your insurance company updated about that. So that's the thought around the engineering risk. This is one big thing around health insurance. Of course, the awareness of insurance has increased a lot in terms of health side because of this COVID and other things. What has happened is during this period, government has issued a circular specifically for all those corporates or all those SMEs who want to start their operations. They have to take a health insurance policies for their workers who want to start the operations. This is a copy of the Government of India circular, and in many of the corporates, they do not have a health insurance policies. Sometimes they have a ESIC cover, basically the employee state insurance cover. And what ESIC says is ESIC basically covers all those employees up to 10 employees, except Chandigarh and Maharashtra, where it's up to limit is 20 employees. And this covers up to 10 employees up to a salary of 21,000 per month. And it is mandatory to cover those under ESIC health insurance. And the same is also regularly checked by the Labor Department on the same. And under the ESIC health insurance, the treatment cannot happen outside ESIC hospitals. That's the biggest restrictions, because you have to go only to ESIC hospitals, and ESIC hospitals may not be equipped to handle your health insurance cover. And if your company has taken a health insurance cover excluding ESIC, yeah, it takes care of these guidelines out there. But the normal questions that come is, sir, I have a group personal accident. Does it cover this guideline? No, it is not. Your workman compensation policy does not cover this guideline. You have to have a ESIC cover or a group health insurance cover. Either of them will do work. And the advantage of having a separate group health insurance company, group health insurance cover is you can define your limits. You can define a sum insured, what level of coverages you want. And the other questions that comes is, does your group health insurance covers COVID claims? Yeah, it covers your COVID claims. Your normal COVID claims are covered under ESIC or the group health insurance, and a lot of people are not even aware of this. So what has happened is many new products has come in the market in terms of COVID cover. So there is specific COVID cover. That there are three types of COVID cover. One is individual benefit cover in the market. So if you are detected with a COVID positive by the government authorized laboratories and other things, you get a fixed sum insured around that. That's called a benefit cover of COVID. There is an indemnity cover of COVID, which effectively means if you are detected with COVID or admitted in hospitals, you get those bills and the insurance company will pay for that. And the third is the insurance companies have come up with a group COVID cover, basically covering your employees and workers in terms of, say in a company there are 30 employees, there are 50 employees, you can take a group health insurance cover for your COVID as well. So these are the broadly three areas which has come up in terms of COVID coverages out there. A lot of innovations are happening out there in terms of how do you help your customers in terms of ensuring that the COVID expenses are covered around that. And there are multiple products available in the market. ICICI Lombard has launched a COVID health indemnity cover, a COVID health benefit cover, and a COVID group COVID cover for the employees. And some of the companies, what they've done also is, since they do not used to take health insurance earlier, neither they had a COVID cover, they have also taken a vanilla health insurance. Basically, is a cuttled down version of health insurance, wherein the premium is a little bit lower compared to larger products or full-fledged group health insurance. And that covers COVID as well as the non-COVID expenses. In terms of group health coverage. So when you say group health insurance, is basically it pays you when you're hospitalized. So some of the corporates have taken a simple vanilla GHI cover, the group health insurance cover, which covers both COVID as well as non-COVID expenses out there. I think that's a very intelligent move by some of the companies they have done, because ultimately one needs to take care of the employees, and COVID is going to stay out here. It is not going to overnight gets cleared out there. So you need to protect your employees out there. So that's the thought around group health. So this is one big risk which has recently become much more activated in the last after COVID happening. So what has happened is, since majority of the employees are working from home and they're accessing informations from home, they are not under the safeguard of the corporate safety or security from the cyber point of view. They are using their Wi-Fi of home, or probably a modem, or they're at home and other things. So and they are dealing with a lot of data of the corporates from their home. So there is quite a surge in the cyber risk, hacking and other things happening. We've seen in the last 2-3 months. And to give you some of the examples, what has happened is the cyber criminals are basically capitalizing the public fear. There is a fear around that, and there is 667% spike in coronavirus-related phishing scams. These are data which are available in Google and many sites out there. There are some 16,000 new domains registered, and around some to be genuine and unofficial, and most of them are fraudulent around COVID scams out there. So there are cyber extortions in the name of donations out there. A lot of people are using this mode in terms of using doing a cyber attack in terms of the corporates or the employees out there. The threats now and after lockdowns, basically one is, of course, your data security threats, increased financial frauds which is happening out there, and this may continue beyond post-COVID as well. And some of the industries which are most hardly hit around this is basically your healthcare, hospitality, your ITES companies, your banking and financial services company. So these are big time hit because of the cyber. Normally, SMEs do not used to take about cyber risk. Do not worry too much about cyber risk because they have much larger risk to handle and things, bigger risk to handle. So, but in the recent past, we have seen a lot of this SMEs getting hit by this cyber as well. So, just to give you some in terms of what is this product which covers, this product basically covers your financial losses that results from the data breaches and other cyber events. This covers your notifications cost, your forensic cost, your cyber extortion cost, and third party as a result of cyber incident. So currently, if you see, there are two types of products available in the market. You can have a group cyber cover for all your employees as a company. There is also a retail cyber cover. An individual also can take a cyber cover. Hacking can happen from your mobile itself, can your laptop itself. From your iPad as well. So you can also take a retail cyber cover. Earlier, those products are not usually available, but we have recently launched even a retail cyber cover. We have a group cyber cover for the employees. So either of them, you can take to protect your plan, risk or the corporates from the cyber, because this is going to be a dominant risk ahead. So these are some of the broad thoughts I thought I must share with you in terms of what are the risks which is affecting all of us in this period. And I've already shared with you basically engineering, property, marine, cyber, and health. These are broad areas. That beyond these areas also there are multiple risks, but primarily this risk accounts for majority of the things. My suggestions to each one of you, of course, would be risk. The SMEs at this point of time has multiple risks. One, of course, from the business point of view, there is a lot of challenges out there. God forbid, they also have a risk from the insurance or the point of view or the risk point of view out there. And do take adequate coverages for your plant, for your machineries, for your employees, for your assets, and insurance might cost you a little bit lesser looking at the risk, but don't forget to take insurance. The biggest challenge today in this country or in India is a lot of SMEs are uninsured. Normally they believe that peril will strike somebody else, not to me. That's a belief they carry, and we need to change that perception in terms of as a aware customer or aware insurance company, we need to handhold each other in terms of helping each other in terms of getting the risk covered. Even if there is challenges around getting a full-fledged cover, all I'll request each one of you is you can have a cut down cover, a curtailed version of your cover. You can always get in touch with the insurance company saying, I need a reduced version of that because there is issues around liquidity or working capital. You can also ask for insurance company curtailed down cover. And there will be a Q&A session on the live on the day it will be live. Please do ask your questions. Our team would be there to answer those queries out there when it comes up. And if you still have any other queries, you can put me a mail to my colleague Vivek Venugopal. I've given his email ID. If you have any queries related to presentations, related to any insurance queries, or any queries related to the risk, do mail us. We'll certainly help you in terms of giving you guidance in terms of how do you cover this risk and how we can help you in terms of business as well. So thank you so much, and please, we'll be happy to answer any of your queries. Thank you. And thanks so much, ClearTax, as well.